come with my daily recap TGIF. I'm so happy I actually made it through the week, kept my promise to do a video every single day to kick off the month of March. And just a friendly reminder, I'm going to be doing a video every single day for the month of March when the market is open. So that's basically Monday through Friday with the exception of the weekend. So capping it today, taking a break tomorrow and Sunday, and then I'll be back at it on Monday. So let's jump really quickly. I'm gonna try to make it really short because today is, well, Friday, and I'm pretty sure you have other things to do. Anyway, you're looking at the S&P 500, the SPY. It's a daily chart. We're looking at a line chart. We closed at 383.63. The bulls, they came in looking at volume, decent volume, and they essentially saved the day, right? So just full disclaimer, full disclosure, I am positioned short. I positioned myself short a few days ago. When this trend line was breached, I actually went short. And if we go to the candlestick chart, let's zoom in here. My short was actually looking quite nicely today with the market going as low as 372.64. While I wasn't sold on the sell-off, again, I positioned myself short and just to mitigate or to hedge with some of the long positions that I have in my portfolio, which is not too many. But anyway, close to 383.63, the bulls step in. I want to show you something. If you switch to the weekly, right? Look at that wick. Anyway, if you switch to the weekly, looking at the line chart, right? On the weekly chart, this trend line remained intact. It never breached, right? The market never breached this trend line. If you look at the weekly close, you can see right here, it maintained it. We bounced off of it a few weeks ago, bounced off that line, and this week, essentially, we bounced off the line as well. On the daily, we broke it, but on the weekly, it remained intact. So for me, again, although I'm positioned short, I have no problem letting go of that short if next week it looks like the market wants to rally. So sitting here at 383.63, we managed to close slightly above this trend line here, which is a nod to the bulls. You look at volume, again, you can see that they stepped in. So next week, I know I said this week should be telling, what this week told me there is some level of indecisiveness in the market. So next week, I would say mainly Monday. Perhaps it might carry over till Tuesday, but Monday will more or less tell me if the market wants to continue trending higher, if it builds on this momentum it started today, or if this was just sort of like a bounce and we're headed lower next week. So not in a rush to put on any new position, although there's a lot of stocks that are setting up. I've held the long positions that I've had for quite some time that's performing very nicely, and I've hedged that going short the market. So next week, I'll have more information. If I let go of my short, I'll let you know. But for the meantime, position short because we cratered. You can't discount the selling volume the last couple of trading days if you look down here. However, the bulls did come in strong today, and I want to see if they're going to build on that heading into next week, or if the bears are going to step back in and we're going to plummet right through this line. If we break this trend line again, I'm inclined to add to my short position. What else? All right, so let's take a look at Amazon. I thought about going long this trade. I decided not to. It's an asset that has performed extremely well, but it's really high priced here at 3,000. What's the odds of it doubling to 6,000? So for me, it's not to say that it's not a good trade, but I feel like with long positions, I might want to look for a company that's currently undervalued, that has more potential upside than just 100%, and who knows how long it's going to take Amazon to get to 6,000. Anyway, but I like the chart, and I'm talking about it because one, Coming to America debuted on Amazon Prime. I believe it was either today or yesterday, but definitely comment in the comment section if you are a Coming to America fan. I saw part one. To this day, I think the movie was made in the 80s, some north of 40 years later, like it still makes me laugh. I feel like I'm pretty sure I saw the movie sometime this year, if not this year, late last year. I watched a movie at least once a year, not intentionally or anything like that, but if it's playing, I'll watch it because it always makes me laugh. It's really a cute story. So really interested to see what they do with part two. Hopefully it can live up to the legacy of part one. But yeah, comment in the comment section if you're a Coming to America fan or an Eddie Murphy fan. But back to Amazon, who, interestingly enough, bought the movie for, I think it was like 125 million, something like that. Hence why I'm talking to Coming to America. I'm not just talking about it for no reason. It's because it's going to be streaming on Prime, and Amazon bought that movie. Anyway, we closed at 3,000. It's a daily chart dating back to around July of 2019. Obviously, there's much to be said about the past, but let's just look at once it bottomed in March of 2020 to present. So we had this sell off here, like most stocks in the market. We bounced, right? In March of 2020, it went as low as around 1600, a little bit above 1600. Would have been the perfect opportunity to actually go long. Let's call me McGreedy. I wanted it below 1,000, and I thought that it could potentially get there, considering the markets were like in free fall, but it didn't, and I missed that opportunity, getting it around 1600. And from there, you can see that it had a nice trend up, really clear trend up. And from July of 2020 to March of 2021, right, a little shy of about a year, for me, the stock has been doing nothing but consolidating and trading range bound. And I love to trade these stocks because I think they're relatively easy to trade, right? When a stock is building up a base and consolidating. And FYI, the longer it does this, if it eventually breaks to the upside, it's going to be a violent, and when I say violent, I mean violent in a positive way. I probably should have used another word, but when it breaks through, it's going to actually go on a massive run the longer it consolidates. Anyway, close to 3,000. You can see here, if we zoom in, you can see where it had that bounce today, right? It went as low as $2,881. So that's that support line. And again, if you don't know how to trade the range, it's very simple. I talk about it in our free trading course at ShortMeTina.com. So if you're not signed up, definitely sign up to that. You can see here again the daily chart. We're looking at a line chart right now, and you can see here perfectly again from July of 2020 till present. Anytime it got to like that 2,800 area, you can see it here, sort of here. Anytime it got to that level, the market bounced, right? We got the bounce here, cratered, got that bounce, pullback, we got the bounce again, the pullback, right? So on and so forth. And today, again, being that this consolidation or this base has been building for a couple of months, the likelihood of it bouncing, in my opinion, was high. I did see it as a potential trade. I thought about going long, but then, sticking to my guns, being short the market and not being quite sure what the market had intentions of doing, I passed on this long. However, even sitting here at 3,000, respecting risk, it's not a bad area to go long if the market bottom is in, right? And what would be the next stop? The next stop would be somewhere around here, around 3,500. So you're looking at about 500 points of upside if you want to trade Amazon. What else? All right, so let's wrap it up and round it out with ticker EYES. You're looking at a minute chart, and I just want to focus in on price action today. Clearly, you can see here the stock is up about 300% on the day. If anyone was long, huge congrats if you were able to capitalize off of the run today. It's down slightly in after hours. I think it's down about 12%. I see a quote here of 508 or 506. So in after hours, we're trading somewhere around, let's say here. This is where we're trading in after hours. However, again, we closed at 572. This is what the final quote I saw in after hours. So from a technical perspective, and these types of stocks, they can run because the float is so low. Based on Yahoo Finance, the float is around 13 million, which is, it sounds like a lot, but it's actually not. And so these types of stocks can run. Although it's up 300%, and you can see it's pulling back here, it still potentially can be a good long trade if you can withstand sort of like the volatility, because let's call it what it is. It's a penny stock. If you can withstand the volatility, it's setting up, in my opinion, for a decent long. Now, for me, again, and let me draw this line here. This purple line, the one at the bottom, is essentially where it's trading at in after hours. From a risk reward perspective, for things to look, in my opinion, relatively rosy, I would want the stock to, at minimum, open up above or at or near today's closing price of around 579, 572, whatever, in that 570 area. So if heading into Monday you see a lot of positive pre-market trading and the stock is trading up to around at least above, let's say 530, 550, if you can stay above there, for me, that would be a relatively good place to go long. If it opens up below the last quote that I saw of around 506, 508, and it cannot get back above that heading into trading session on Monday, for me, it looks like the stock might create some more. You can see like a pretty intense 20, 30, 40% sell-off. So if you can withstand the volatility and you're looking to jump into this trade on a long side, I would probably take the trade if the stock can get above this purple line here. And I can't give you an exact price point like 551. It kind of doesn't work that way. It's usually a range or like an area. Okay, so hope that makes sense. Ticker EYES. It's up beautifully on the day, 300%, and even though it's down slightly in after hours and after this massive run, for me, the chart isn't necessarily dead. It can still actually come back to life, providing that when it opens up on Monday, or at least in early trading on Monday, it can get back within this range, or at minimum above that 540, 550 line. All right, makes sense? Let's cap it there. Tina here once again from ShortMeTina.com. If you enjoyed any portion of that video, do a couple of things for me. Definitely like the video and comment. Like, it really does help in terms of getting this video out to other traders just like yourself that might be looking for a little guidance when it comes to the stock market, or at least charting. The second thing, or the third thing, is right now what we're doing is we're hosting a free 14-day trading course on our website. You don't need to give me a credit card, just a valid email address so we can know where to send the videos to. Bear in mind, I've been trading for about 20 years, and what I send you are things that have worked for me, or the things that I've learned over the course of 20 years. I went from losing tons and tons of money, I'm telling you, it was like crazy. I was about to give up, to now at a point where, I know how to function in the market. I'm very comfortable with my strategy and my methodology, and I've had several years of consistency. So that just kind of proves to me, well, kind of know what I'm doing if I'm consistently making money, right, year over year. So anyway, if that's something that you're interested in, definitely head on over to our website, ShortMeTina.com, sign up, become a member. Thank you for listening, and for those that are still here after a couple of years, thanks for the support, and I mean that. And I'll talk to everyone on Monday. TGIF, and enjoy your weekend.